Yo, good morning, traders. What's going on? And welcome to another episode of Market in the Morning. I'm your host, Kevin Dubrisky. Today is Wednesday, June 24th. Can you guys believe it's already going to be July? Guys, we have Imre on. It is Wednesday. We're going to give you guys some of the best price levels out there, the best analysis you can have, go over some headlines that came out overnight, and keep you guys updated on the market. So hit that like and subscribe button because Market in the Morning starts right now. Yo, Imre, good morning.
Hey, what's going on, man? What is going on?
What's up, bro? How are you? Long time no see.
Yeah, I'm excellent. It's another week in paradise, Things are going good.
Good to hear. Good to hear. You want to share your chart? We'll dive right into it.
Yeah, let's get started. I mean, today is not a very news-heavy day, is it? I mean, we don't have a lot on the economic calendar. So what that means is let's take a look at what we do every single morning. This is my flow. I like to start looking at what happened overnight. So yesterday we had a big down move in equities. And today, well, at least overnight so far, we've been kind of coiling within yesterday's value area range. So that means I'm going to turn to some breaking news here in high impact news and see exactly what's been going on. So if I'm looking at high impact news, there isn't really, a lot that's going on. Sure, European leaders seek NATO unity ahead of potential U.S. troop reductions. Whatever, that's not going to be market moving. And then from yesterday, Trump, I've agreed to allow Hormuz Strait to remain open with no further naval blockade. Again, that's not really news. There isn't anything too much going on here that was high impact overnight. And that explains, the coiling action that we've seen here, right? So whenever we see coiling action, the big question to me is, okay, what is going to happen? Are we going to stay in this range for the day, or are we going to attempt breakouts, right? So that's going to be the big question on my mind, is if we are going to attempt a breakout, looking for the potential failure of that breakout versus weighing the odds of continuation, with failure typically being a more probable scenario. So seeing some potential traps starting to form in the S&P 500, for instance. We can take a look at some other markets that have been moving and flying around. Obviously, gold has been flying around really nicely as well, continuing to keep some pressure on there. I personally still hold my conviction that the next really big move in gold is going to be higher, not lower, but very happy to be able to buy at increasingly discounted prices. And then just as a quick, as we're just moving through some of these markets here, same thing with oil. I still believe the next big move in oil is going to be higher, not lower. So again, happy to look for oil at discounted levels. We've got the market target level at 70.50, not too far off from there as well.
Imre, do you mind? Now, you mentioned you want to see oil higher, not lower, but at this point, we're getting headlines. People might be thinking, oh, well, if the war is ending, things are coming to a peace deal now, why would you be expecting oil higher?
Yeah, let's take a look at that. Let's just zoom out a little bit so we can get a little bit more information on oil here. And what we can see zooming out, I do have one final downside target level, which is a little bit below the one on the market terminal, coming in at 67.84. Obviously, that is just the top of the gap, preceding the huge volatile spike from the war in Iran, right? So could we close that gap? Absolutely. I have no issue with that. But there are still some longer term fundamental constraints that are affecting crude. And I believe that ultimately those fundamental constraints are going to prevail. And those constraints are very simple. You can open the strait all you want. That production does not come back online immediately. So I believe that now we're seeing the final stages of this kind of collapse, short-term collapse here in energy pricing, and then the fundamental reality is going to set in. So I think a lot of what's driving this move right now is a combination of people getting carried away with the last leg of the trade and some technical pressure as well. But again, ultimately, those supply constraints aren't going anywhere anytime soon. So I'm very, very happy to be patient and wait to pick my spot here with oil.
Awesome. Great breakdown. You mind if we circle back to gold and silver right now? At the
Yeah,
moment,
let's
they're
do it.
spiking lower with some volume. Silver's over 50% from its all-time highs right now. Crazy pullback, 52%. It is below $60 for the first time since November of last year.
Yeah, yep. Okay, so if you guys follow me on X, I've got a crazy post. I don't typically trade silver. I don't think most people typically trade silver until last year, and then what a journey it's
Then
been
everybody
since
did.
then. And then everybody did. But I've got a crazy post on my X. I'll go dig it up maybe for next week, where I had an options trade on silver. This is real money, my money, guys. And that trade was up 7 figures, then it was down 6 figures, it was up big 6 figures, and I couldn't get out of the trade because the liquidity was so tight in silver. But I took a video, like I turned it into a GIF or GIF, whatever you want to call it. You can see the P&L flying up and down 6 figures in a matter of minutes, multiple 6 figures. Insane trade. Thankfully, it turned out okay. I didn't get, I got out, not with everything that I could have made, but I got out. So the moral of the story here, folks, is silver is not for the faint of heart, especially when it is very volatile. I personally think, and this is coming from my perspective as a futures trader, not a CFD trader, the position sizing on futures makes this almost untradeable to me for most people. So I'd much rather focus on gold. But, it's very similar price pattern, right? We can see big drop, sideways base, now big drop. With gold, you got a big drop, less of a sideways base, but more of a sharper pullback than another big drop. I think the underlying technical theme here for both is going to be fairly similar. The thing that I'm keeping a big eye on when it comes to silver is very simple. It's going to be looking at this prior area where we had established fair value. That's the major area that I'd be keeping an eye on, anywhere from about $52 to $48. Could you short pullbacks into that range? Feasibly, yes. It's just not my trade, if I'm being honest.
Gotcha. Awesome. Here, you know what? We've got a great producer and myself, and I was able to pull up that tweet you were referring to, right?
No way. Get out.
Let
Oh
me see
man,
if I can pull that up, and I'll
that was absolutely nuts.
see.
Yeah, it is. James, I just see your question there. It is a constraint. I'll talk about that in a moment. Like you are right though. I mean, drill baby drill, and I'll talk about some other things as well. But yeah, how nuts is that, man?
Wild.
Yeah. Like that was absolutely, you have to expand it.
Oh,
I didn't want to include my like account information.
where's the expand? I can't see it on there. It's weird. Oh, geez.
Oh, can't you just like click
Oh,
on it
there
to
it
make
is.
it? Yeah, there you go. All right, boys, check this, and girls, check this out. So it's up like 50K, 60K, 200K in a second, 360K down to
Wow.
58K. Like that was panic inducing, man. And this kind of rhythm happened. It happened like, even there were even bigger swings that I didn't manage to screen record in real time. And after a certain point in time, I was just like, like I just have to accept it is what it is. The liquidity constraints were insane here. But this trade did hit over 7 figures. At one point, I did not get out with 7 figures, unfortunately.
Got out
But
of date.
yeah, so that was a nuts trade, man. Whew,
That
was
is crazy, man.
But yeah, just pulling up James's question here: is oil supply really constrained as much as people think? So in the short term, the answer is absolutely yes, because the damage that was done to the strait. First of all, they have to demine that thing. It's not like as easily passable as it was before. Second, some of the supply that gets shut off, because here's the thing with oil: you can drill and produce as much oil in the Gulf as you want. Okay, but now that oil has to be either shipped out or stored. And what happened is storage started reaching capacity. So when storage tanks reach capacity, you can't even extract more oil. You have to shut production down because that oil can't really go anywhere. So when that's the case, when that's the case, what's going to happen? Right? You're going to lose some production, and it's going to take time to get that production back online. So just empirically, fundamentally, mathematically, the supply is more constrained now relative to pre-war, and we're approaching pre-war pricing, right? So that to me is more of a technically driven move than a fundamental one. And I will be looking. I'm not saying we're going back to $100, guys. Like that's not what I'm saying at all. What I'm saying is that I think the technical unwind of this trade as shorts start to exit and we see some fundamental rebalancing on the production side, I think that is going to be a fascinating trade to the upside, right? So it's a bit more of an advanced trade idea because it's not as simple as just fundamentals say up or down and then taking a technical trade. It's really thinking a couple steps ahead here and waiting for the shorts to unwind their position.
Awesome, man. Awesome. Do you mind? What about SpaceX? I feel like we should cover SpaceX.
Love this. Yes, let's go. SpaceX. All right. Man, so what did we say about SpaceX? Did we say something about people being bag holders and
Yep.
not paying for
Leave it
retail
alone.
pricing?
We
Where are
said
we
don't
at with
touch
SpaceX?
SpaceX.
Jeez, the downfall is real. Okay, so it's obviously below the what was the IPO issue price? 160
It
or
was
something?
135 originally, came
130.
out 150, and then
150.
people bought
Okay.
it up like crazy, hit highs around 220, and now
Okay.
we're back
Okay.
to 155.
All right. All right. So okay. My thoughts on SpaceX. If you look at 150 versus that insane high of nearly 230, you know, is it a relative discount? Absolutely yes. Can it go significantly below 150? Also, absolutely yes. So there's a couple ways to play SpaceX, and I'm assuming I'm talking to fellow day trading degens here. So, um, I'll address the longer term prospects of SpaceX in a moment, but let's first take a look at what market's saying, which I completely agree with. This is a very technical stock right now. It's trading. I understand that there are fundamental narratives that will push any stock, but in my view, this is a very technical stock right now, and it's going to trade on a technical basis for the short term. So if you guys have experience day trading stocks, I think this is a fun name to be playing around with. But I personally am looking for a more searchable bottom before putting some money in. The thesis for SpaceX, in my view, is that it's becoming it's becoming more of an AI exposure play in the short term than it is a long-term space mining play. Because what the hell, guys? We're not mining minerals, on
There's
planets
no
and
gold on the
stars.
moon.
Like not anytime soon, guys. So the thesis there is spurious at best, and even in the intermediate to long term, I bet. But is this one for the future? 100%. Yeah, absolutely. I think it is. It's just about waiting for the right technical conditions to kind of line up here. I mean, good for them. I think they made very strategic acquisitions at the right time. But yeah, I think this kind of waterfall movement down still has potential to continue. So yes, it's a relative discount when you look at prior all-time highs. Do I think we're going to get back to those all-time highs? Yeah, I also do. But I don't think the bottom is in quite yet.
Awesome, man. I'm with you. I definitely, in my opinion, my thoughts on it this whole time has been like, listen, it's gonna IPO. Most likely, it could see a pop, right? Everybody that was like, oh, I have to buy SpaceX, they're gonna be like, I'm right. I'm always right. I knew it was going higher. Then they're gonna buy it again at the highs and then smash. I honestly think it could see below $100 this year. Does it stay down there? I don't think it can, but I think it could present a really great opportunity in the long run if it can dip below that 100. It's still a large company, still already going to be within the NASDAQ. It passed Amazon temporarily in terms of market cap valuation.
Nuts.
Yeah, crazy, man. Absolutely crazy. And it's also, we got to remember too, it's an Elon company. And as we see with Tesla, those companies hate trading at a real PE ratio.
Yeah, I would argue that, in this market environment, PE ratios have kind of flown out the
Yeah.
window. I don't think Look, I speak to quants. I'm not a hard quant myself, and I do know quants that are running long short strategies, and PE ratios are a factor that play into how they make those assessments. But yeah, this is not the market environment where I'd say PE ratios is the first metric that I'd be looking
Yeah.
at to assess suitability for a trade.
Yeah, no, that's exactly my thoughts, is that whether it's 30 or 100 times, I think Tesla right now is like 350 times PE. Like it's not affecting it. You can't look at it and be like, "Oh, well, it's overvalued right now." It does not care. It has all
Yeah, that is nuts.
yeah.
The thing with Tesla, right, is interestingly enough, it's of course I think people who are selling out of SpaceX will also sell out of Tesla as they see the risk as being concentrated. Um, yeah, I mean, it, I'm very short-term neutral on Tesla as well. Like I don't think it's a buy here. I'm not necessarily looking to short. I'm just waiting to see where we start agreeing on some fair valuation, start to base a little bit, and then I'll look to make a play. There's one other market I really want to talk about,
Yep.
and I've been, it's one of these things where I think I'm early on this idea, but it's the dollar index, guys. So. Still looking for some upside here, which I'm wholeheartedly in agreement with. I think the fundamental drivers are definitely supportive of a bullish dollar in the short term. However, there is a but. There is a but. And that but has a lot to do with this little statement here. Since June 2025, we've been in a 5% range. Okay. Now, at this point, we've climbed out of that range significantly, and for few days now, we've been outside of the upper boundary of that range. Okay, this rally is not going to go parabolic. It's the dollar, guys. It's not a hot IPO stock or a meme coin. It's the dollar. So this rally is not going to remain parabolic. So when the rally ends, that is when I will be very curious to see whether or not we actually fall back within the range. I will not put those odds at zero. Okay, I think the odds for that are reasonably high. And there's a couple things I'm looking at from a technical basis here. Okay, so if we're looking for a measured move, that measured move would take us all the way up to nearly 103 in the index, right? However, there's also this short-term pivot point here, which we're approaching, coming in just below 102. Okay, so I think there are some reasons to look for technical resistance ahead here in the dollar. But here's the thing with the fundamental thesis for the dollar. Inflation's up, Fed is turning hawkish, but they're still lagging a lot of other major central banks. And I think the Fed is going to be under so much political pressure to delay being as hawkish for as long as possible. So even though they might make a bit of a hawkish pivot here, and we can see under Warsh and that first press conference, we did indeed see a bit of a hawkish pivot. They're going to try to be as dovishly hawkish as possible, if that makes sense, right?
Yep.
So, given that, my question is, are we pricing in too strong of a dollar a little bit too quickly? That's kind of the thing that I'm waiting to see here. So strong dollar, weak gold, totally makes sense. But I'm personally looking for those winds to shift a little bit, and I'm getting ahead with my contrarian stance here. Okay, so I'll be very frank and forthright here. There are times to be a contrarian. There are times when you want to follow the herd. Right now, in the short term, I think following the herd is still going to benefit you more than being a contrarian. But if you want those big swing for the fences home run trades, you must be a contrarian. There's no doubt about it. And I have, just based on my decade plus of professional experience and the things I'm reading a little bit further ahead in the macro tea leaves, I'm going to be a contrarian on a bullish dollar at some point in time.
Awesome. So you know what? I'm glad we covered that, because that leads into one of the questions we have here in the chat. I think it was Huz was asking, can you explain why gold is bearish even though we have a more bearish oil and yields are not that strong? Is it because the Fed's looking for a hawkish stance due to inflation seeping and due to war?
Yeah. So it's really all about the Benjamins, baby. I mean, gold is priced in dollars. Gold also does not offer yield, right? So Doesn't offer yield, meaning if you buy gold, the only way you'll make money from gold is if gold goes up. Whereas institutional allocations will typically go to yield earning assets, right? It's why, again, like you can be a Bitcoin maximalist as much as you want. Bitcoin on its own also does not pay yield. You have to move into some derivative markets, and the liquidity in those markets is a little bit thin for large institutions to be piling in to those markets in mass. So why is gold bearish right now? I think it's because a lot of that flow is moving to the dollar, and people. Here's the interesting thing. What did Warsh say? One rate hike, I think. One rate hike.
He said one. Banks are reporting up to 3, but we'll see. We'll see.
Yeah,
Warsh.
I mean, we can see that in heading into July, the odds of a 25 basis point increase are exponentially higher than of a 25-point decrease, and same in October, and same in September, and then same in October, right? So we can see that there is going to be an increasing desire for the market to be pricing in more hawkish monetary policy shifts than the Fed is currently signposting or signaling, and that's what the market is pricing in, right? So the market's always you can think of all markets as a futures discounting mechanism. They're trying to price in all available known information, and I think personally the market is right here, but I think we've gotten a little bit too carried away a little bit too quickly. The other thing that we have to consider is that there can be technical factors that will exacerbate a fundamentally driven move. So for instance, if I am short some gold, right, and what does that mean? A market maker, I had to, a market maker basically has to buy the gold from me that I want to short, right? They have to provide the liquidity. For every seller, there's a buyer. For every buyer, there's a seller. The whole purpose of a market maker is to stay as market neutral on their positions as possible. So if a market maker, who is basically giving you the gold to go short, and gold is getting crushed, well, what's that market maker gonna have to do at some point? They're gonna have to start joining the trend, and they're going to have to start, getting directional exposure to a market, which adds even more fuel to the fire. Generally, market makers prefer stable ranges that look like this. It allows them to predictably hedge their inventory, right? So when we're talking about a significant trend in a huge commodity like gold, there are going to be technical factors that kind of accelerate the move and take it a little bit further than what the fundamentals should arguably say is fair value. And speaking of gold, I still have a final downside target here at 39.58 to 39.62. So just revising some prior projections and looking for that to get hit. We had this long-standing level of 41.07 as a major target, offering a phenomenal opportunity the other day. Now we can see just the beautiful reaction to that level, and now the move down, looking for that final zone to get hit.
Awesome, man. Let's go over some gold analysis, give some traders some levels to keep an eye on. And yes, guys, believe it or not, we did have those gold shorts yesterday. I'm pretty sure we had Nalab in the comments. Pretty sure he came in just to gloat. No, I'm just kidding. But those shorts, man, yesterday, me and Nil on point with those shorts. Again, guys, Nalab is the ultimate gold bear, gold trader, killer, man. That's what market's all about. I'd love to see, me personally, real quick, I'd love to see a pullback on gold on GC to 40.62, 40.70. Ideally, I wanted to see 40.90 as a pullback, but the way we've been selling off, to see a 70-point pullback right now, I don't know if I would want to short it at that point. So a more reasonable area would be here on the 15-minute time frame where we recently pulled back and then continued. So that is 40.45 on XAU USD, 40.60 on GC. Now I'll let you do your thing.
I completely agree with you, man. Like the same areas that I'd be looking for. That'd be a very nice move back to 60s.
Yep.
I mean, geez, we're talking about $30, which is a big move for gold.
That's nothing nowadays.
Yeah, it's nothing nowadays, right? The only thing I'll keep an eye on is you can see how fast of a drop that we had here, right? So if sellers want to defend that level as they just did, several minutes ago, then we can see, we can see more shallow pullbacks and continuations unfold rather than looking for deeper retracements. But that's going to be a game time decision, guys. You have to watch the flow in real time and see exactly what's going on.
Absolutely. Guys, every time will tell on these trades, but we're not counter trend trading. We look at our market terminal. What's it tell us on gold? We know our bias is still bearish. We know we have downside targets. And we also just see on the charts, guys, right? There's strong momentum to the downside. It's not a catch a falling knife kind of day today. There's no economic data that could be flipping the bias. Everything is still status quo. So we want to be trend is our friend. Yo, good morning, guys. Good morning. Good morning. Good morning. Emre, is that a Madrid away jersey? Caught some gold shirts.
Oh man.
Gold
Yeah, it is. It is indeed Hala Madrid. I'm actually, man, like it's people ask me all the time, what team do you support? What team do you support? I honestly love the game. I love the game. I love fascinating matchups. I'm as much an old school Barcelona and Real fan equally, which might sound like sacrilege to some, but and I just love the game for what it is. So this is my team's shirt. Like I play in a competitive men's league. We have a game later today, so it's a hot day outside. It's a breathable shirt. So
Where can we watch
wearing
this
it early. Oh man, love that question. Messi or Ronaldo? Listen, I'm just to give you a sense of me, right? Like I'm 5'7". I'm not the tallest guy. Messi is by far to me the best player on planet Earth, given what he's able to do. That doesn't mean Ronaldo isn't phenomenal. I think Ronaldo is an absolute monster of a player. No, he's not what he once was, but I've got to take Messi just based on my own player profile. I mean, he's definitely a player I modeled myself. When I was growing up playing. My favorite player that I have, that I look at for inspiration, that I try to play as, is a combination of Iniesta and Eden Hazard, though, just because I'm predominantly right-footed. But anyway, way too into the weeds on footy there, but that's something I could talk about all day.
These are the right questions to ask. No?
Yeah.
I think let's see, we covered oil, right? We spoke about how you're expecting oil to come back to the upside, possibly temporarily, not a big move to 100 again, but just because of some of the supply chain issues. Do you mind bringing up oil on market and going over that one more time real briefly for anybody who just joined?
Let's do it, guys. So just keep in mind, like, I'm looking like 5 steps around the corner here. Short term, the momentum is obviously bearish, and I believe there are technical factors here that can still exacerbate the move down. All right, so on a technical basis, on a short-term fundamental basis, everything is saying short. I took a couple stabs in around the 72 region. Those trades didn't go anywhere. Thankfully, didn't get burnt, didn't make any money. And now I'm just waiting to see if we get a local bottom here, somewhere around 70 to 67. If we close that pre-war gap, I'm definitely going to be looking at the market with interest. Now for me, oil is a fascinating market because it needs to be treated with a tremendous amount of respect. There are certain days to day trade oil. Wednesday is one of them. Why? Because every morning around 10 a.m. Eastern, we have the EIA inventory report. It's obviously not as market moving a report as it was pre-war, but it's still a burst of volatility that can help day traders get some positioning, find some exit liquidity, find some entries, what have you, depending on your approach and style. Swing trading oil is not really for the weak, just because holding over a weekend when there are major geopolitical tensions going on can be terrifying. Been there, done that. Oil is responsible in the early days of my career. Oil was responsible for both my single day biggest gain and my single day biggest loss. and in those early days, that loss was about twice as much as the gain. I actually thought I was going to get fired from my job. And that traumatized me from oil. I made 6 figures in one day trading oil, and then I lost multiple 6 figures day trading oil over the next like 36 hours. I really thought I was going to get fired. It was the best thing that could have ever happened to me, because I was riding a hot hand as a young prop trader, and I learned lessons from that experience, let's say, and never had anything remotely close to that happen ever again. So
That's a nice
best thing
lesson
that could have
into risk
happened.
management.
Yeah, exactly. So oil is a beast, right? Like it can be a very momentum driven market, both fundamentally and technically. So I don't want to get it twisted, guys. Short term, like if I was forced to trade oil, I'd be shorting pullbacks in the short
Yeah.
term. Okay. Longer term, I think those supply constraints are ultimately going to dominate the fundamental narrative.
Okay, but now those supply constraints, is it due to the whole war situation?
Yes,
Yes.
100%. Yep.
Okay.
Yep. So here's what happened. What happened in the Gulf? Did the Saudis shut down oil production entirely? No, they kept it going because they didn't know what the situation looked like. But there's only so much oil the Gulf can produce before it has to ship it out. And if there's no way to ship it out, then they have to shut down production. And it's the same thing in terms of how oil hits the economy in terms of price increases. There is a delay. There is a delay. And right now we're seeing a very weird delay here where the collapse in oil prices is going to take a while to work its way through the economy as well. So if we get a very swift collapse followed by a very swift increase in prices, what does that mean for overall global inflation? Stay tuned. But essentially it comes down to production having to have been slowed down. And then once that production has slowed down, there is nowhere for that excess supply to go. Now that supply has to go through the market, and then production can start catching up. But I still believe that there is going to be a significant months-long delay before we see some real stabilization between where the market is pricing oil, where the supply actually exists, and all that still assumes that we're going to get normal transit through the Strait of Hormuz. So
Yep.
I think where I think where oil is right now is like peak best case possible scenario for everything working out. And again, I just don't think that's the most likely end result.
Yep. Here we go. We got a question right up your alley. Good day, everyone. What are you, Kevin Warsh? I don't understand US 10-year 10-year is selling, but the dollar's very bullish. I thought they had a positive relationship. What caused that?
Yeah. So that's a good question. It's not necessarily going to be an immediate one-for-one reaction, right? So what does this mean? If yields are going down, that means bonds are going up. Okay, so there's still going to be there's obviously going to be a lot of interest in bonds as that's going down, and ultimately, what does that still create demand for? It's still going to create demand for the dollar, right? So the dollar is a very tricky animal. It's a very tricky currency to trade because there can be fundamental drivers that on a surface level basis should suggest a drop in dollar valuations, but in reality, if you look at the logic that's just a little bit below the surface, it actually makes sense, right? But that's it's also not like a real-time one-for-one reaction, but ultimately what's happening right now is we're seeing a bit of a pickup of interest in bond in treasuries, and ultimately that's also going to reflect a continued underlying demand for the dollar as well.
Awesome.
So yield is just one thing that can drive demand for a currency, right? So that's one thing that, for example, the yen carry trade, right? You need a funding currency, and the yen is an exceptional funding currency because it's basically free money. So if I'm going to convert if I'm going to borrow in yen and then convert that and use those borrowings to invest in projects somewhere else, where I can earn even more yield relative to the interest I'm paying on the yen, that's one consideration where yield does impact the demand for a currency. But yield is not the whole story, not all the time anyway.
Awesome. And all right, here's another one. Would it be best to stay out of gold until yields and the dollar both get on the same page?
Hey, it really depends on what you trade and how you trade it. I actually don't I know there's a lot of gold traders here that focus mostly on gold. I'm not one of those traders. I think gold has been a phenomenal market to trade as of late, but it's for me it's historically you got to put things in context for me with gold, guys. So I started looking really at gold. I started trading professionally right around here. Okay, so from May 2016 to July 2019, gold did nothing. We got a rally. I was late to that rally. It got a small piece from what I remember, and then we had another long consolidationary period 1,300 days roughly where gold did nothing, and then we got this crazy rally, right? That just has been unstoppable. For the majority of my career, gold has been a very quiet instrument to trade. It's also not something that, yeah, look, there are huge gold traders out there, but generally speaking, a lot of my career has been focused on stocks and options, right? So gold is something that I'll pay attention to, but I tend not to trade physical, like I tend not to trade gold futures. I tend to trade and express my ideas in gold through gold mining stocks, right? So I tend to look at the ETF first, GDX, which is the gold miners ETF, and then I like to look at specific stocks that make up, the ETF basket, and look for names that I think are undervalued or overvalued, right? So, in terms of waiting for yields, dollar, gold to stabilize, I personally think we're at current extremes in that trend. I think things are a little bit stretched out. There's more downside to go for sure. I think if I'm a day trader, sure, I can day trade gold lower, can day trade dollar higher. But from my perspective, as someone that's waiting for like a really big trade, like a really big idea that's going to unfold over several months, if not years, I'm patiently waiting. So it's just different perspectives.
Awesome. Well, let's cover some S&P 500 and NASDAQ.
All right. I want to pull up the cash market here because there's a couple things I want to look at in both S&P and NASDAQ. So we can see here, this was the gap up, and then we've more than filled that gap and we're trading below the gap. And this is the cash market. What I said last week was I wanted to see if that move into the gap was enough and whether we would, be able to power out and make some new highs. Okay. So we did power out, we didn't make new highs, right? So I didn't get the full extent of the move I'm looking for. Now we can see here, just to highlight the gap here. We can see here that we're just on the lower boundary of that gap. And that's why I've got a control zone here down to about 70, what is that, 74.23, okay, the lower end that we're poking out. So I think we're at a very critical juncture here in both the cash and the futures. And if we do not start powering higher here, we're building value. That just means we're agreeing on fair prices, and we can see that there's immediate downside pressure. So if that downside pressure continues to accelerate, you can see I've got my downside target zone at 72.78 to 7,300. I always say, I pick a side, right? And based on my control level and my control zone, I stick with that side until control flips, right? That keeps me on the right side of the trend and not hunting counter trend reversals. So if we're below the control zone, and I see reasons to go short, I've got a lot of runway. Similarly, if we start breaking higher and building value above the control zone, I think the upside's a little bit challenging in the short term. I'd be looking roughly at this little high volume node here in TradingView around 42, and then I'd be targeting the higher volume node up here at around 88. So there is some upside to play for as well, but we'll have to see. I think the path of least resistance, that doesn't mean the best trade. It just means I think the pressure is on the market to rebalance a little bit further. Short term, because this is maybe going to happen over a couple sessions. Could happen very quickly if we have some news. But short term, I'm also keeping an eye on. We can just see very clearly here how the market has treated this as a bull bear flip zone as well. So roughly 73.95 to 77 or so, 75.
Awesome. So we're just asking, what's the side volume profile indicator you're using?
This is a visible range profile. Again, TradingView does not you cannot plug into real tick-based volume data through TradingView. So this is an approximation, but it does a pretty good job if you're on a higher time frame. It's pretty close to the real thing. This is a visible range volume profile. Now moving on to NASDAQ. It's very, very interesting as well, right? You can see we've completely closed that gap in the cash index, and we're below that gap. And we can see in the futures, very similarly, we have to ES kind of building value on the lower end of that. So in practical trading terms, what does that mean? It means that down here is a potential look below and fail zone. What does that mean? It means that we could spike through here, trap a bunch of aggressive shorts, and then start a recovery. So what I want to see is not a swift move down. What I want to see is a move down followed by value building, and then I want to see the breakdown of that. Or value building without a clear move down, and we start breaking back up into the range instead. I had this conversation with a trader yesterday, and one of the things that they told me was I struggle I struggled resisting chasing a movement, right, in the market. I said, okay, here's why you have that problem, and I'm gonna solve FOMO for all of you right now in 2 minutes.
There we go.
Right? I'm gonna solve FOMO in 2 minutes. There are only a limited number of things that the market can do at any given moment in time. Okay, the market, when we're in the zone, for example, we can get a sharp move down that just keeps going and going and going. That's scenario number one. Scenario number two is that we just chop around here for quite some time. Scenario number three is that we just go up and up and up. Scenario four is that we get a false breakdown, right? And then the final scenario would be like a false breakout higher. So there's a limited number of scenarios. Now, how many of those scenarios do you have an actionable trade plan for? How many of those scenarios can you specifically say, if this happens, then I do that? And if the answer is 5, then fantastic. You can trade the market no matter what happens. I don't have 5 trade plan scenarios. I'll say that right now. I've got a very clear scenario in mind if we have a look below and fail. I have a very clear scenario in mind if we have a look above and fail. I will struggle to trade this if we just get a directional move lower without any kind of pause. But I also think that's the least likely scenario. I think the most likely scenario is some kind of false breakdown, a false breakout, or just consolidation. Right? So because I'm able to visualize and prepare for all the different possibilities, I'm not going to FOMO into a trade because I've already predetermined under what conditions I'm allowed to take a trade in the first place. Does that make sense, guys? Like that is how you solve for FOMO. It's by pre-planning everything.
That's right. That's right. If you have a plan pre-market, you're not going to just jump in randomly. You're going to wait for your plan to play out.
All right. I saw a comment here that gold is dumping. Let's see.
Yeah, gold. Wow. GC below 4,000, man. We've been saying that for months now. Finally here.
There we go. There we go, guys. If you are chasing this, I
don't.
Just
don't.
Just don't. Okay. Like wait for a real technical setup.
Yeah.
Otherwise, you are literally gambling.
You're gambling. You're going to be liquidity. You're going to jump in. You're going to jump in this trade, get stopped out, think you were right again, jump right back in, get stopped out, blow your account in a single day.
Yep. You got it. But yeah. I mean, like, good stuff, man. We're covering a lot of ground here. This is going to be, I think, an interesting trading day, depending on the market that you're trading. Given the no news, I don't think this is a day to look for huge reversals unless we have an unexpected headline. Speaking of which, let's take a look at our Trump tracker, because I was looking at this earlier today, and let's see. Midday signing of a major housing act and an evening high visibility speech. Okay. All right. So we'll have to see. In-town pool call time, nothing unusual there. Noon. So yeah, somewhere in that press conference, there might be opportunity for Trump to say something a little bit out of pocket, but yeah, I mean, so far I'm not seeing anything too insane here.
Man, if Trump's talking, there's always an opportunity for him to say something a little out of pocket.
For sure. Yeah, Kevin, man, I gotta start heading out, getting ready for the trading day here with my team. But it's always a pleasure, man. It's always a pleasure to hang out.
What do you mean you gotta? All right, that's fine, man. Imre, bro, thank you for dropping knowledge. Talk about a ball knowledge knower, man. Just knows ball. Imre's the GOAT. Appreciate your insight on everything you touched up on today. So, guys, throw a like for Imre. Any last minute comments or questions, please drop it in the comments right now. But Imre, thank you so much for all that information and for joining us here every Wednesday for Market in the Morning.
Yeah, no problem. Hey, Kevin, just one last question I wanted to answer. Where do we find the Trump tracker? I'm new to market. On the left-hand side, we have a number of features here, and we're going to do a much better job, I think, highlighting what each of these features do, because they are all useful in their own various ways. But at the very bottom, we have a Trump tracker. Now, here's the beautiful thing about the president's schedule. It is publicly available, which I'm sure is a nightmare for the Secret Service. But, you know, this does give us a very strong idea and understanding in terms of where the unexpected news headline risks are based on the president's schedule and based on what he's been talking about recently, right? So we've also got official Trump headlines here too. No, I love this feature. Love this feature.
Yeah, no, it's awesome.
All right.
Market makes everything easy.
I got to get out of here. Thanks a lot, traders. You know, and I'm serious about the FOMO thing. Like a market can only do X number of things. So think that through. Realize what you do and don't have a trade plan for. Understand you don't need to have a trade plan for every scenario, because eliminating the scenarios you don't want to trade is arguably more important than identifying the scenarios you do want to trade. And doing that will keep you out of those unnecessary losses. I know that everyone here can find a good trade, but can you stay out of the unnecessary losses? That's what holds you back, in my opinion. All right.
Well said. Well said. Thank you, Imre. Be good.
See you guys.
Have a great rest of your day.
Absolutely, man. See ya.
Take care, bro. Guys, that was Imre, man, the one and only son of Tony, Mr. Imre. Great knowledge, great understanding, great execution. Fantastic. Absolutely. Hey, what's going on? Hey, Kevin and Imre, could you look at USD-CAD? We can take a look at the USD-CAD for sure. For sure. Look at this, guys. Oil crashing below 71. This is crude oil right here. Let's take a look at USD-CAD. And guys, if there are any ticker recommendations, you want to look at anything specific, please let us know. What is it? CAD USD? There it is. Let's pull that up on our market tab. Do I have it saved? Let's see. CAD USD. There we go. Market's going to break down the fundamentals for us, pull any news headlines that are relevant and can help us see some follow through or insight into the trend of the market. Anything you might need to know, any economic data that's coming out, what is supporting or going against the bias. It really is your Bloomberg, but in a much better version, much easier to read, easier to understand, and not a crazy expensive amount. So while this pulls up, we can take a look, see if we have any new headlines. We see OpenAI and Broadcom unveil new LLM processor with 50% cost savings. That's pretty big in the whole AI race and situation right now. 50% LLM cost reduction from OpenAI and Broadcom. Custom Silicon Valley threatens NVIDIA's AI dominance, right? We know it's not just NVIDIA in the whole AI race. It's all these other companies too that are still trying to keep up. I'll give that just one moment right there. Take a look at some of the charts here on CAD USD. I think I'm on the wrong chart, man. CAD USD. USD CAD. Oh, I'm under futures. That's why. I'm like, why isn't it pulling up? There it is. That's it. My apologies, ladies and gentlemen. Get that going on the right one. There we go. Much faster. That's what we like to see. So what's supporting the bullish bias on USD CAD? Well, hawkish Fed dot plot signals for higher for longer U.S. rates. We know that that was supporting the dollar. Medium-term Canadian growth outlook lags perceived as resilient of U.S. economy. Rate expectations still a favor relatively tighter Federal Reserve over Bank of Canada. So it's a lot of the news, right? A lot of the headlines, a lot of where the Fed is positioned. Remember, we're not just trading charts and markets. We're trading the financial markets. We're trading the reactions to what the economy is doing and what that Fed is saying, whether it's Canada, US. We have to know everything, especially if you're trading something like USD CAD. So still slightly bullish, Buy side target is 143.079 and support is around 141.87. So that's what we're seeing here. I like this 141, 142 area on USD over here. We see that these wicks over here shows us buyers kept absorbing the sellers, right? Sellers kept trying and they failed. Sellers tried again and they failed. Buyers resulted in this bigger move to the upside. So if we can get a pullback, that would be a great possible entry on the USD. Let's take a look now at some other opportunities, see if anything is presenting itself. Looking at some ES, looking at some NQ. I had a 15-minute order block area right here. I was looking for price to hold. It tried and now it failed. Now, we're very range bound on the S&P and NASDAQ, so we're going to have to be extra patient when we look for that trade today to take that general trader direction. Could always look at the daily time frame. We see yesterday we had an extremely strong move to the downside. What we can also do is mark out previous day high, previous day low. I'm a big fan of marking those out. Gives us some insight into are we above or below that price level. So here's previous day low on NASDAQ. We have not taken it out yet. Previous day low on ES was also not taken out either. So it just shows us that we're within this range. That last attack was marked. Look at this, guys. Gold, 39.85. This is insanity right here. Yo, you got it. My pleasure. We are just dropping like we're hot. We look at the daily time frame on XAU, USD, and GC. So on our left-hand side over here, it's GC. Right-hand side is XAU, USD. The reason I have them both up for you guys is because I know a lot of you in here are trading Forex, and some of you are trading futures. So by putting them side by side, when I'm marking out a level here on GC, you guys will see that same relative level on XAU USD as well. Now, guys, whether you're a new trader, you're trading for a week, a day, 10 years, you know we're not selling lows. So as much as we would like to be in a short position, seeing the momentum and strength we have on gold, selling the lows down here is sort of setting yourself up for failure, right? You're going to be like, okay, let me go short, but then where's your stop loss? Do you put a random stop loss at a recent candle high where you have the opportunity of price stopping you out and then continuing in your favor? Or do you be patient, wait for a valid entry? Maybe it's a fair value gap, below volume shelf, whatever your trading strategy is to follow the overall trend. We get the overall trend from market, MRKT, gives us some insight. We say, okay, well, let's look at gold right now. Bearish and bearish. What's supporting it? Trump strike threats and talks collapse, reignite Iran conflict fears. Okay, well, let's see what exactly they're talking about. Here we go. We have a headline. So it's cool, guys. This is an update to that market added a couple months or so. What it does is it gives you the information. So it gives you a quick little dialogue, it gives you the small little brief, but then it also pulls an actual headline that supports whatever it is it's talking about. So U.S.-Iranian exchange of words threatens peace talks. Fed signals stronger, persistent inflation and higher for longer interest rates. Forex dollar rises to 13-month high on Fed hike bets. So safe haven bid, we know that bid means people are buying. So if safe haven, we want to know, okay, that's the dollar. They're talking about the dollar there. The dollar is rising. Remember, the dollar is also considered a safe haven. And when the dollar moves higher, a lot of times, like we see, gold moves lower. Let's take a look at our USD here. Here's our USD. Look at this, guys. What a move. Wow, what a move. We're on the daily time frame right here. And what do we see? Just pure strength in this move right here. A 2% move on the dollar in the past week. Very strong. This is not something that we would want to be trying to predict the highs. Oh, we're above this zone. We have to pull back. I remember some people were a little curious on like, how do we trade this? If the dollar, I remember also, let's take a look real quick. This is a great learning example right here. We're going to put GC on the right-hand side, which for whatever reason gave me not gold. Here we go. So somebody was asking, and we were looking at the, here it is, found it right away. Dollar was pulling back. Somebody in the comments said, well, if the dollar's pulling back, shouldn't we be looking for longs on gold? It goes inverse. Shouldn't we be looking for longs? But we have to remember the overall trend, the overall momentum. That's what we like to look for. So we had this pullback. Yeah, that's just a pullback. Because guess what? Gold also gave us a small pullback, but it failed and continued lower. The dollar failed and continued higher. So it's a buy the dip opportunity if you're looking at something USD related, but really sell the rip opportunity on GC or XAU USD. Buying short-term gold. What's up? Welcome. Short-term gold, 39.70. Oh, man. With 150 pip point stop loss. Yeah, definitely be careful, brother. Got to be careful trying to catch this. It definitely does resemble a bit of a falling knife. As if we're looking at the overnight session, and this was our short position we called out yesterday, we are currently down 1,500 pips, right? 150 points on gold. So yes, I'm looking for a pullback. I'd like to see a pullback too, but I also don't want to be the trader that's trying to jump the gun on the pullback to say, oh, this is where we pull back from. No, this is where we pull back from, because you might be doing that one or too many times. And then by the time we really get the pullback, you might be out of capital. You might have hit your daily loss limit. You might be out of your trades. Guess what? You should have been maybe waiting for that proper trend trade. Now, I do hope that it does play out for you in the short term for the pullback, because we are looking for a short position, right? We're looking to go short on gold. We want to see a pullback to give us that short opportunity. S&P and NASDAQ, so choppy right now. This purple zone is really what I'm keeping an eye on. This worked as support yesterday on the ES. We ripped up about, 60 points. NASDAQ, we held around 29,640. We ripped up about 300 to 400 points, and then we rejected the 30,000 level. You guys remember that key 30K. So I'm looking to see if we can pull back and find another short opportunity on the NASDAQ here off of that 30,000 level. I'm not looking for a big trend trade. I'm just looking to trade the current range markets are giving us. Same with ES, right? We're failing that. I'm not interested in that anymore. Let's see. Somebody's asking, can you look at Bitcoin? We could look at Bitcoin. Last time I checked, I think Bitcoin was trying to push back below, back below 60K. It's at 62,000 right now. Now, are you Santon, let me ask you, are you day trading Bitcoin? Are you swing trading Bitcoin? I know Bitcoin, most traders are more of a long-term investor on it, but you are able to day trade crypto nowadays, and use margin as well with that. Bitcoin, in my opinion, you guys see the level I have marked out, that 60,001. So anything below 60,000, in my opinion, is a good buy and hold opportunity on Bitcoin. But that would be without say for any type of company that sees a strong pullback, that you have faith that the company or the stock is not going to zero. If you have faith that Bitcoin's not going to zero, you could buy under 60K. It could dip to 40,000. You're still holding. You're still holding. It doesn't matter. You're adding down there. Not financial advice. You trade this with however your knowledge is on Bitcoin, whatever your experience and your exposure and your managed risk should be on Bitcoin. Never put more money on the table than you're willing to risk. This goes for options traders, futures traders, stock traders. If you're investing 10K into Bitcoin, I'd hate to break it to you, but you better be ready to lose that 10K. Maybe 8K, it's not going to zero overnight. We should be able to exit ahead of time if, God forbid, it does crash like that. But you have to be prepared for anything. Markets can be completely unrealistic in the moves that happen and can be very painful. We talk about pain and gain in the market. Well, where there's pain in Bitcoin is the lower, right? The downside is where there's the most pain right now until people start going heavy short in Bitcoin. I believe below 60K, people are going to be selling Bitcoin more than buying. So that's where I think pain is going to start to come in. And don't forget, Michael Saylor, man, MicroStrategy's Bitcoin holding, I'm pretty sure they're holding like $1 billion loss right now. MSTR Bitcoin value total loss. They are looking at let's see, Total investment near 56 billion. Their unrealized losses can fluctuate between 10 billion and 20 billion in total losses for MicroStrategy. Now, do they make anything? Who knows anymore? No, I'm just kidding. But really, talk about pain. That's max pain right there. Imagine MicroStrategy got liquidated on Bitcoin. That would be huge. Gold continuing lower, another low of day. Again, as much as we want to be short, we're just not selling lows, but we're also being very careful to not buy these lows either, because we know the general trend is much stronger to the downside. Is Nalab here, bro? We'll have to see. I think he was in the comments before. Nil, drop a comment if you're still here. What's up, Ryder? Kevin, love your energy and vibe. Can you please give a rundown on both NQ and US 30 are consolidating on the hourly? Absolutely, bro. I got you. We'll dive into some NASDAQ first. Now, for the US 30, that would be the Dow, right? So US 30, it's the YM in futures or the Dow. What is the Dow on the ticker is? I don't think Dow. It is Dow. Wow. Good. Real interesting. Yeah, we'll come in. Awesome, guys. Let me grab that invite for Nalab. Getting Nalab joining us here in just a moment, too. And while we're waiting for Nalab, let me cover NASDAQ and US 30 for you. So NASDAQ, I mentioned before, yesterday we rejected off 30,000 even. We rejected, moved lower, back to the bottom of our range, moved higher, moved lower, very range bound right now. This is not a market that I'm going to be trying to force trades or jump into. This is something I'm going to be patient. I want to see a reaction off of 30,000 on NASDAQ to the downside. Trade us back within that range. And I will be keeping an eye on equities. Here's our equities chart to say, okay, look, Microsoft, NVIDIA, Google, are they selling off or are they pumping higher? It's very important to know where your equities are currently trading if you're trading things like the NASDAQ or S&P 500. Let's take a quick look at the Dow now. So that's going to be the YM, like I mentioned, young money. Let's get it. Daily time frame. Always want to keep an eye on the daily. Let's mark out that previous day high, previous day low. And then what we'll also do is we'll come into our market terminal and we'll see what's breaking down in there. So here's our 4 hour. We see we're very range bound. We're not really going anywhere. Just like you mentioned in the hourly, we're range bound. In the 4 hour, we're range bound. Here we go on the 2 hour time frame. I do like this zone that we created yesterday. Bit of an order block area. And we also see if we extend it to the left, this was an area that price reacted to over the past 3 days. And here we are on day 4 that we are again reacting to. So I'd like to see New York session open. Maybe we get to move up to here. We reject it lower on US 30. US 30 should be similar price action to US 30. There we go. Same zone, same area. Going to be right over here. And that's going to be off of 51,750. 51,750. Support on the US 30 would really just sort of be that bottom of the range area as well. Say, okay, right down over here, we have found support over the past few days. So there we go, guys. We're finding the range with our technicals, but then we're coming over to market for our fundamentals to know which side of the range we should be trading on. Take a look at YM. So looks like it's saying slightly bullish here on YM. Just give it a moment to load. There we go. Slightly bullish on YM. Iran GCC talks on Hormuz ease energy supply fears. That's a good thing. Prospects of Iranian oil flow supports growth, lowering energy costs, which we know is a good thing for NASDAQ as well as growth stocks, because if it's lower energy costs, big tech is spending less. Let's see. Can we see upside push in gold because 10-year yield is dropping? We could possibly see a short-term move. Don't lean so heavy on some of the things like yields and the dollar for the overall trend of gold. Right now, we can look at it. Right, we're looking at. Let's pull up the dollar here for a moment. There we go. So dollar's rallying, right? But if we're pulling back on the 5-minute, look, we're pulling back on the 5-minute very strong here on the dollar. That doesn't mean I instantly want to go long on gold right now. We know markets are going to have pullbacks. If anything, sure, maybe it's giving me some support that we should pull back. But right now, we're staying patient. Guys, we got the one and only Nil joining us here. Yo, what's
up, Kevin? How's it going, my man?
Good morning, bro. We got a special guest today. What?
Dude, I had to make an appearance because do you see what's happening to gold?
Bro, I don't even
How on point were we with our call yesterday?
dude,
When
crazy.
every single time we do a gold short call, there's always someone in the crowd telling me, hey, it's not going to work out. It's not going to play out. And guess what, ladies and gentlemen? I told you yesterday, Kevin and I told you, okay, I'm going to rewind this to right here. Who was here? If you were here yesterday, drop a one in the chat right now, just so we can show the people who that we took this sell live on call. So we talked about this that hey, if we broke above these highs, I even have the drawing over here. I know I do somewhere. Yes. That when we broke above these highs, and if we start closing below, I told you guys that I will look for sells if we close below and structure starts shifting, right? As soon as we were coming back below these highs, it was a it was a reason for you guys to look for sells. Now look for shorts. Now let's look at what played out in the markets. Wow. Okay. So let me break something down for you right now. Okay. So we had this push towards above these highs to our left, these lower time frame highs right here. We pushed above it. We can see buyers exiting, sellers jumping in. Okay. I did not enter here. I told you guys exactly where I was going to enter from. And that entry was going to be when we snap back below these highs. This is the same trade I've taken 3 times in the past 3 weeks. Every single time has been on market in the morning. Excuse me. Now, I take the short, okay? And I'm going to show you my exact entry. This is my short, guys. I didn't enter while it was up here. I entered when I got the confirms of price coming right back down here, okay? Now, my stop loss, I told you was going to be 160 to 170 points, 170 pips, okay? So what this does now is my stop loss is above here, and it's a little bit above this little high to the left at 41.45, all right? Now you may be saying, Nalad, yeah, but you're still under 41.50. I'm completely aware of that. I know that, okay, if we break above this, we're likely going to push to 70s, which is the next area, right? This 50s area deeper into 50s. And I'd rather just look for a re-entry than hold more drawdown going into this higher price point. Okay. So we said that either this was going to play out or the other scenario was going to play out. I'm not even sure I have that anymore, but it was at this sell point at 41.60, high 41.50. Anyways, so now I'm in the sells and I'm floating in profit currently, right? And I have my take profit extended down towards the downside right here is where we mentioned was the next intraday area that we were looking to target before pushing deeper into these lows. So now that I'm watching price action, I'm looking at 5 minute. I understand that price is now back below these highs. Now, if I'm an intraday trader, this is where you need to enter and you need to leave. You need to set your take profits, set your stop loss, and let the market do its thing. The market does not owe you timing. It doesn't owe you that it has to move this session. It doesn't have to move Asian session. It doesn't have to move London session. The market moves when the market is ready to move. So as long as I am positioned correctly, I know that I'm going to increase my chances of success. So with markets bias also being bearish on gold, as we know, plus with any further ceasefire deal talks not holding much weight currently because it's all up in the air, shit keeps getting violated, I'm just going to let it do its thing. Now, if we pay attention to what played out, and just a quick reminder, gold is at these lows right now, right? Like we are just digging deeper into here. I would not be looking to sell right now. If anything, what we could get coming into today and going into tomorrow is a relief rally. Okay. And why I'm saying that is I'm not saying that that changes structure or sentiment on gold. We're just tapping into a very high liquidity area. The last time we were here was October 2025, and look at the monstrous rally that led into. So, there's a lot of liquidity sitting at these swing lows over here. So that's why I wouldn't be looking to sell into these lows because that would be the stupidest thing you could possibly do today. I would instead look to see where price bottoms out here. And in that case, you would risk lower than you would in the direction of the trend because this would be a counter trend trade. And all you'd be doing is buying the retracement, which would eventually lead us into some sort of lower high and a lower, which would then come back into structure as market moves in waves. Keep in mind, we've seen this countless times, push up, push down, push up, push down, new low created, lower high, push down. And guess what comes when the new lows created? Some sort of optimism, some sort of data that brings in a dollar weakness short term, and then you see the markets print a new low. So this doesn't mean direction has changed just because we're going to see potential buying come in from here, right? Like from here, as you can see, right from 60s, we're seeing potential buying. Am I in this position right now? No, I'm not. What I would rather like to see is how we develop going into the next session. But just going back to what we were talking about here, now that I'm in this position from yesterday, I'm going to let it play out. I'm going to let it do its thing. And look what ends up happening. I'm just going to clear these a bit. Look what ends up happening. The market pushes right back above this level, back up to these highs. Now, does this invalidate my trade idea? It does not. Now, why doesn't it? Because it has not broken above the level that invalidates it. Keep in mind, I went into this trade entering after we closed below back here, snap back below, with the intention that, hey, I'm going to have my stop loss up here. As long as that doesn't hit, I am good. I don't even know where that, that came from the other chart. But now that this started playing out, I'm just doing my own work, by the way. I'm working on market stuff, so I'm not even paying attention to the charts. I have a ton of meetings in my day, so I just enter my trades and I let it be. We came close to my stop loss. We were still about 50 points away from it, but you can clearly see how as long as that level gets respected, that price area, I don't give a shit what the candles look like they're about to do. This, I'm telling you, so many people in these shorts were probably, so many retail traders were probably, I don't know why it's being a bit slow right now. TradingView needs to get their shit together, guys.
They don't have a team like Market does. You can't
like, look at that.
them.
I refreshed it. Wow, that's beautiful. That as I was talking about this, as I was talking about this started happening. I was like, guys, you wouldn't want to sell here. You'd want to see if you can catch the buy rally. Well, we didn't call out the position here, but you can clearly see how as we dig deeper into this liquidity area to the left, that buying, especially after such an intensive sell-off since the start of the week, right? Like, keep in mind, I told you guys, we shorted this weekly high. That weekly high runner right now is 2,500 points. And that I have such a small position on, but it's in profit larger than the take profit I did for the partial over here. You know what I mean? And that was a much bigger position. So think about that. The potential of letting your positions run to these swing type plays that only happen across a few days. This is from Sunday. This isn't anything like, oh, I've been holding this for 3 weeks. This is Sunday. This was last Thursday after FOMC. So when I know this, I know I can just let things go, let it run. And it's the same philosophy I have when I enter a position. Is I'm in this trade, I don't care what it looks like the market is about to do. The market could look like it's about to break towards the upside, right? Like the amount of people that were probably looking at this area and like, oh, shoot, they see this green bullish kind of like, oh, you know what? We're going to push up. We create a higher low here, higher low here, higher low here. We're going to push up. They fail to understand that, hey, positioning is not in the longs right now, that you are trying to buy after the market has tried to already create a lower high. Now, look what happens when I just let it play out. And I don't care what it does, because all I'm concerned about is as long as this price holds, why do I care what happens to my position? I let it run. Few hours later, I'm in profit. I withstand every single one of these little pullbacks in the lower time frame. And guess what? I took my merry profit over here. And now you can see how if you just entered on that trade idea, let it be. Yeah, you'll go into a bit of drawdown. Drawdown is temporary. Drawdown, I like to think of it as a little loan I give to the market for the short term. And then I take it back when the market's set up, when it's ready to move. But what I did was I executed on the same trade idea I told you guys. I didn't get soft-handed and close as I went into drawdown. I held it through because my stop loss was up here, my take profit was down here, and I hit that entire take profit. I closed half my position at 40.69 as we were getting this sell-off. We got this pullback. We retest this 4,100, which again, if you're trading Asian session, this is also a great scalp sell. Is that once you see sellers jumping in, buyers exiting, this is a great sell to ride towards the downside. You have a range to target if you're a scalper to first here, and then of course these lows here, right? And that's the move that I anticipated, that I would ride my sells all the way down to here into these new intraday lows as we make our way merrily down to fill these lows from last Thursday. Okay, from 2 Thursdays ago, sorry, June 10th. Now, look at where we are now on gold. Now, gold created a new lower low. Did I anticipate that? Yeah, we talked about this. All these leading up to these weeks that, hey, gold was going to, we said this, hey, gold is eventually going to take out these lows. It took out those lows, created a lower high while everybody was buying last week on gold. We told you guys, watch out for this price zone, that anything above here is a clear sell-off. Hawkish FOMC repricing happened. We took the sells, right? We took the sells here as well, rode them all the way down to here. We took the Sunday market open sells from here, provided lots of opportunities here. Kevin called it out right here, market in the morning on Monday. We took the sells again here, right? Now look at this, guys. Now, when you look at this and you zoom out, everybody who was trying to buy gold on these little pullbacks, they're all eating our dust. And this is what happens when you take a trade idea. When I open up market and I look at market and I'm like, hey, I can clearly see we're bearish. Why are we bearish right now? We're bearish because of these factors that are playing into it right now. Fed sees stronger, more persistent inflation path, dollar strength on Fed hike bets. All of this plays into gold and all the outflows gold has been seeing. So now, when I look at gold here, I understand we are digging into a demand area, a high liquidity area over here to the left, right? Now, this tells me we've just had massive outflows. And this isn't just in this week. This from last week, this move started. We have just reached a new swing, a new intraday low. This was our previous low to the left over here, right? Then we had the peace deal about to happen. Apparently, it got signed right before market open. We gapped up. We had hawkish FOMC summary of economic projections. The following Asian session, which we mentioned always provides great opportunities, following an FOMC, sold off, opened up weekly, created a new lower high, intraday sell executed on Sunday market open, following the same sentiment from here, Fed hawkish bets leading to a bearish gold. Same bearish gold that we were playing here, but this was driven by escalations on the war front. Now the focus on Fed hike bets, okay? And then we executed again yesterday at this on the break and retest of these lows. Now, we were targeting this low. We went lower. Our runners are now eating in profit. All the way from this. Obviously, I'm not holding these anymore, but I'm just telling you, like we played this sell, we played this sell, we played this sell-off, we called out this sell-off, we called out this sell-off, right? Now look at this. Over a course of 3 weeks, how many thousands of pips have you caught here? Because you were aligned with the macro fundamentals. Now, if you weren't, then every single pullback, you're getting eaten up, right? You're getting eaten up. People are buying here, getting eaten up. People were buying here, got eaten up. Yeah, they made some profit, but all I'm trying to tell you guys is I want to catch these moves, right? I want to catch these plays because there are those whales in the market that are literally causing and catching these plays. So why can't I catch them? Of course I can. I just have to, again, expand my time horizon, right? That's what you have to do. And exactly how I was mentioning here, like now, look, we're above 4,000. Guess what's going to end up happening? We'll quickly come to 40.25 if we maintain above here, right? Now, would I look to buy right now? No, not really, because this to me, even if I'm scalping, is a very B-level setup because my original buy entry would be from here. Now, imagine something like this happens where you push down, okay? Let's say you get some sort of confirmation like this, double bottom forms, and then we push up. Now, this looks like a much more logical area where I'm looking to test that buy. Yeah, we may not even get that. We may even just get a quick retest and then continue like this, going off of this, right? But all I want to do is position myself so I'm in the best entry possible. I don't want to take a buy here and then have my stop loss all the way down here, 500 points down. That's illogical, but that's the type of risk that you would be putting yourself in if you played this type of move, because what's stopping the market from playing out this scenario where we pull back down, double bottom, maybe not this session, but maybe an Asian session, we push into these price points. Let me just move some of these dry. Push into here, come back down, retest the same lows before buyers get that relief. Because not always will you see buyers create a low on the first instant they tap in, right? Like here, look how many 30-minute candles came to this area. We created a lower high, a higher low here, higher low again, and then we had the catalyst, which was Trump mentioning the peace deal over here. You get what I mean? Then you have a catalyst that leads the rally. The rally doesn't happen by itself. It's either induced technically when you tap into a strong liquidity area, in this case being the 50s and 60s, as we were talking about to the left, plus being technically induced as we just filled this massive range, created a new low. So that's why I said we're not selling in this session. I'm looking to see where gold can head off, where buyers can really take gold. And some of the price points I'm looking for right now are these intraday price points, right? Yep. And some of these intraday price points align perfectly where the previous areas we took sells. So now let's mark some of those up, okay? Now let's mark up some of them. One of them being 4,100 area right here where we took those. There you could have gone nice sells in London session. This area right here again, 4130. This was the sell-off that we took yesterday. And then of course your higher time frame liquidity area from our weekly open as well, which would be a nice sell point. Now, what I understand is we're at a very early stages of a pullback, is that you're going to see resistance. You're not going to see market just cleanly sweep right up to here if that's what was going to happen. There's going to be a catalyst. Since this is counter trend trading, you should take your position and profiting when you can. Like as you're digging into here, it's a good idea to take profits if, let's say, you were in these buys from on the break above this consolidation area, this value creation over here, as Emery would call it, right? This would be a good area to take your profit because you're not shooting for the stars here. You don't know where price is going to find its resistance and where that large amount of selling pressure is going to re-enter the market. So I don't want to be greedy when I'm counter trend trading. I want to take profit and move on and wait to align myself. Now, am I looking to sell as soon as price comes to the next key level? No, because I want to observe and see where that selling pressure comes. Let's say it actually ends up coming here and building up. You're not saying that it's going to happen. If it was to happen, that's when you would want to sell, right? You wouldn't want to front run a sell after price has already dropped thousands of pips since market open. This is a session where you exercise more patience because the moves have happened, because the moves took place over the course of the early part of the week. And then what we can do instead is, okay, what is US equities doing? Great. US equities is still consolidating. We're still consolidating within this level. We couldn't break yesterday's lows. We pushed up a bit and then pulled right back down below this range over here. And this is just the levels that I have in US equities over here. But what ends up happening is, okay, what is some of the next levels, areas of liquidity that we have on our chart over here? So clearly we have this massive liquidity zone over here. But what ends up happening if we don't make our way down here? Maybe we just end up consolidating until we have enough buy orders in the market. And then what this ends up looking like is some sort of play towards upside where you get a break, you get that retest over the course of the intraday period, and then your cleaner buys align with the change of structure, like something like this, right? Where you get that pullback, you enter those buys instead of trying to anticipate in consolidation and eating yourself up. Like think about how many people were looking to buy here or have tried to buy here. That's what these bullish candles, bearish candles are. People just getting eaten up in this chop, right? Now, if we can't get this sort of movement and price action, then then this level holds and you might see outflows down to a better demand area, which is lower in this case. So maybe we'll just take look at some comments. Impulse over corrective for sure. Across 6 years of trading, the lab is the one who I've learned the most from. Happy to see you win. Thank you so much, my friend. I truly appreciate it. I love to see everybody winning as well. And I think that's what's great is that the more value you provide, the more you help others, the more comes your way. And that's universal for anything you do. It doesn't have to be monetary. It's value-based. Anything that you give to others will come back to you in tenfold. If you give stress to others, guess what? You're going to be a stressful guy, man. If you make others' life easier, like God, the universe will make your life easier.
There we go. Hey,
No,
Nalab.
you were right, and I also took the sells and got some good gains. Sorry about yesterday comparing you with Jeeve. No, man. Listen, as I mentioned, it's not the comparative thing, right? Like both of our biases could have been right. You get what I mean? Like somebody, it's all perspective. Like Jeeves in these buys right now, right? I know he's in these buys because he told me he's in these buys from 60s. So look at him right now. He's up merely 500 pips. So and the amount that Jeeve is up in this move, I didn't even make that much in this move. So just think about that for perspective. You get what I mean? But both of us are right. He was right about gold flipping potentially end of the week after we get a completion of this range. And I was right about completing that range and creating a new lower low before buyers jump in. So it's all that perspective thinking, right? Like, let's say someone in Asian session sells gold here. Okay. Someone in London or pre-London session could be looking to long it right here at this intraday demand. And all they did was ride price up back to the next logical area. And then the sellers jump back in. So it's all a hand-in-hand work. You get what I mean? So it's all perspective. Neither I was right and neither I was wrong, neither Jeeve was wrong. We were both looking for specific things. You get what I mean? So Jeeve in this case made more money on these buys than I did riding this massive sell towards the downside. So that's perspective right there, is that both of us were right, both of us made money, and both of us held our conviction while our trade idea was playing out. Like Jeeve didn't get short-sighted, and just because he attempted a buy, took a lost conviction on that trade idea. He definitely doubled down here and made a killing and recovered those losses. So you get what I mean? It's 100% just perspective. And this is why I tell people is Jeeves one of my best friends. Like I've known him for almost 10 years now. He's a brother to me. He's my business partner. He's family to me, right? But I've also learned that I need to hold true to my own analysis and conviction because Jeeves doesn't pay my bills, right? Jeeves' analysis doesn't pay my bills. Me executing on my analysis pays my bills. So although Jeeves is a much more experienced trader in the markets than I am, maybe we can 100% have opposing biases and both execute and win. And even if one of us is wrong, it doesn't matter. It's like we still held true to our own conviction and analysis. So did we really lose? We did not. Right. So now you can see gold just continued merely right above 4,000, pushed right into this consolidation area in the lower time frame. Again, guys, I want you to use this as an as a learning session. Is that I'm not really looking to call out trades on gold right now because I'm not personally looking for anything. Is if I didn't get these buys from down here, I'm not looking to jump into these early sells because we've been selling off. I want to see how this session plays out. How did this daily candle that just broke these intraday lows and tapped into this liquidity area closes? You get what I mean? I want to see how this plays out. So when I come to the charts and I understand that, hey, you know what? I made money on these sells. I made money on this sells. I made money over here. Maybe I can sit out for a day. I don't need to take another trade every single day because I already profited off one from start of the week. I profited off of one from yesterday. And all of those, I'm chilling. Now I don't feel FOMO because I know that, hey, although I missed this buy from down here, the next opportunity is around the corner. And I say this all the time. The next opportunity could come something like in the next intraday period where gold maybe pushes all the way back up to here. And then you see potential sellers drive price back down to these lows where we retested and maybe buyers jump in to drive price a bit higher. Right? But does that change structure in any way, shape, or form? It does not. How many times have we seen that happen where we come down, create a new low, and then rally back to a known resistance area on the higher time frame? And that rally only takes like 2 days. Like this started Thursday 3 a.m. And by Friday, 11 a.m., we were tapped into this liquidity area. So now you can clearly see that that sort of movement is necessary. It's not only that it has to happen, but you want it to happen. I want to align myself still with the macro bias and the fundamental bias and know that, hey, we can still push up into 4098, which is 4100 level we were talking about, or 4025, the same area from yesterday, and still be bearish. This is the market has the same levels that we were just talking about before. So even if we pushed into this zone here, or into these levels, you'd want to evaluate and see how if price finds resistance there, because these are still key intraday areas. Like even if price pushed up here, let's say there was some catalyst with maybe tomorrow we get softer PCE that causes gold to push up, right? On Thursday, maybe gold comes all the way up here. Guess what I'm going to do? I'm probably going to look for those sells, because that move's likely going to get faded out. That one report doesn't just change the narrative. Yes, it short-term impacts it because of volatility, but it doesn't change the narrative. So that's what I was saying. Don't sell here. Instead, we know we're going to get that relief. And here's this relief from 3960s to 4,030. That's a massive relief rally right there and then. So exactly how we were talking about is that today's not a day that you want to just sell randomly at an area. You want to let the market do its thing. And today is one of those days where you just merely sit on your hands. Look at this. The buyers are in, buddy. The buyers are in just like how they were in here. Now, where does this go before the next selling takes place? I don't know. I'm just going to watch. I'm going to let the market do its thing. I'm going to be here every session observing price action and understanding where the market can go next. So that's essentially what my outlook is. A quick breakdown of the trade that we caught yesterday, called out live on Market in the Morning, explained the stop loss, take profit on those. It reached all the way to the lows of 40.25, broke those lows. And guys, all it took was less than 24 hours. If you expand your time horizon, you can catch these massive plays. You don't have to catch just 1-to-1s or 1-to-2s. Expand your time horizon. Understand that these 1-to-5s, these plays that go thousands of points, are just around the corner.
Awesome, bro. Go, bro. First off, thank you for joining us today.
I appreciate it. Of course, man.
Cool seeing you in the comments. Appreciate you for jumping in. Absolutely killer. Imre had some great information today as well. Let's pull up market and let's go over some of the economic data that's been coming out and sort of pre-PCE this.
Yeah, let's do it. So we have new home sales coming out at like 10 a.m. today. It's not going to have much impact, guys, because we know the main meat and potatoes is tomorrow, is the PCE price index right over here. So when I open this, I have my playbook over here, right? So PCE is expected to come out at 4.1 with a minimum of 3.9 and 4.3 as the maximum. You can already see that the minimum is higher than the prior. So the markets are already forecasting a hotter PCE. Now, if PCE comes at 4.1 above the minimum, it's still below the maximum. So the volatility in that case would be more subdued. It wouldn't be as on point, or if this came out as, let's say, 4.3 or even 4.4. If that was the case, then you would have much greater volatility. Okay. Now, when I open up the market playbook, I can see anything above a 4.2, 4.3 is that bullish reading on the dollar, because it prices in outflows from risk assets and inflows into dollar, as this would mean a more hawkish policy. A higher print would support USD via firmer Fed pricing. A lower one would weaken it. Watch US yields, front end futures, and risk sentiment into the next FOMC meeting. So you get what I mean? Market breaks it down. And on gold, it's the opposite. Above 4.2, 4.3 would be bearish. Anything below, you would have a very bullish gold. So now if we came to these scenarios, then you would see that bullish rally on gold getting extended into the deeper liquidity areas, maybe even all the way up to our weekly level. But we'll take things as they come. We're not here to guess something and then go for it. Imagine if you were in these buys from earlier today, just from this when I jumped in. Now, if price is up here for PCE, and let's say PCE comes out softer, now you're going to be chilling. Now you know, okay, I'm positioned correctly. Just like how we positioned ourselves for NFP, we positioned ourselves from these cells. Remember, we took the cells over here, and then we also had taken the cells here. So by the time NFP was coming out, we were already in profit from up here. 4,500 is when we took those shorts. And NFP, we were up about 900 points, $90 on gold by the time NFP was about to be released. So that's called positioning. That's how the markets will position themselves. So if we do get a surprise soft print, then you know the market's position for the buy side, and you're going to get that relief rally continuing. And in that case, I'm going to come back when the noise and dust settles and evaluate price action, structure, sentiment. Okay. So right now, all we can see is, again, that relief extending. And as long as this continues to happen, most likely going into Asian session is going to give us much more information, as we'll have about 9 more hours worth of price action developed, right? And that's what instances like this, I don't want to just jump in a short because I feel like it, or I see that there's range towards the downside. You can clearly see how strong the bullish momentum currently is playing out.
You mean feeling like it isn't a good trading strategy?
No, unfortunately, if you have a feeling that you need to be in a trade, that's the worst.
That's
the
exactly.
worst type of hunch.
That's the opposite side.
That's the opposite. But there is a good type of hunch, and you'll notice it, is that when you see your setup and you know that you should be in this trade, you need to enter, and that sort of gut feeling is what you need to chase. What you need to listen and wait for. Like, my gut feeling told me, yo, don't try to sell gold after when I saw these candles printing. Don't try to sell gold. And I'm not even going to try to sell gold, because I know that people right now who are going to try to sell gold are the same ones who were trying to buy gold post FOMC.
Yeah.
Right. They're not letting the market do its thing. They're not waiting for price action to develop. Even if this is the area where sellers come, let's just pretend for a second. Let's say this is the price point where sellers come in. Do you think on a single tap the market is going to be ready to sell off? No. The market takes hours before it moves. How do we know this? Because we stay in these trades sometimes for hours. I entered here at 10:30 a.m. The market didn't move past my entry until 2 p.m., 4 hours later, right? Even here, I was in this trade at 9 p.m. Eastern on Sunday market open, 3 hours after market open, took the short. The market didn't move until 15 hours after my entry. Okay, so what does that tell you? The market's not just going to move on the single tap of a price level. It's going to move when it's ready, and it's going to oftentimes consolidate in that price area for a while before you even see that orders building in that market, and then we start to push. And oftentimes that push towards the downside is so much more controlled than the correction. Right? The correction just absolutely takes everybody out, everybody who's on the wrong side. And then what ends up happening is that the market sets up, and that's where it requires the patience. That's where it requires you to have that patience. Just like that patience we had in FOMC, where I was like, guys, like, don't worry. As long as we hold these highs over here, like near these highs, this is a solid sell zone. And although we peaked a bit, we still stayed to our idea. Look at this. Price even retraced 70% before continuing. So you know that the market's not just going to move off a single tap. So let's just be patient. Let's just wait for price to come to our areas. And that way, when it comes, I'm not scared of entering because I lost money trying to fight the market. I'm instead patient. I'm acting like a lion. I'm going to execute my sells or my buys at my key areas when the market calls for it.
Beautiful, man. Beautiful. We got our 4-hour closing now on our futures, ES and NQ. We have our new hourly time frame printing here. Gold pulled back, a crazy pullback there on gold.
Yes, sir. And that's beautifully aligned on GC too, right? Because GC 4K held perfectly.
Yep.
Like,
yeah.
As soon as we came right back above 4K, guys, and you look at GC, Kevin, if you go to the 1 minute, like,
got you.
Right here, that retest, that's your buy on GC. As soon as we snap back above, this is your buy orders building right here. As we're tapping into this, now that we're above 4,000 psych level, guess what? There's your buy opportunity. Buy, SL, stop loss here, take profit towards the upside. Yep. Now you've just caught that after confirms. You're not buying here, right? You waited for this. Even the break above this area called for right here, break above here, first confirmation. And then as soon as we snap back above 4,000, that's the entry. That's the entry. And now that's a $50 move, right? Yeah. So just showing you how you could have caught this as we were calling this out here, right? Like we were calling it out. But GC was a good correlating factor. The fact that that key price level on GC held was likely that the rest of the that XAU USD was also going to hold from 75s, right? 60s. So that's a good correlating factor that futures traders held this level price handle on gold, which is a great psych level. And you can see that hourly candle is resting right on that 4K, right?
Yep.
Resting right on that 4K. Now, does this mean we're bearish? No. Sorry, bullish? No, it doesn't. It just means that short term, we're likely going to see a corrective phase. Now, keep in mind, we don't shift structure in the intraday time frame until we have intraday price action shifting, right? Until you have 1 hour, 4 hours starting to shift structure like this. Now that is when you exit out of this intraday price action. Just because the 1 minute time frame has done this sort of move doesn't mean that gold is all of a sudden now bullish. Or just because gold did this last week after creating a low didn't mean gold was bullish, right? It just means that this is how the market moves. The market moves in waves, and as a trader, you need to be aware of where to take profit, where to enter, where to stay, when to stay out. And right now is one of those areas, as I'm bearish on gold on the intraday time frame, and that's what I have been trading. This is a move I'm going to stay out of. Is that I'm not going to feel FOMO, because this is, to me, is just a retracement.
Nope. That's it. That's what we were talking about earlier, guys. That's funny saying with Emery, like, we see this pullback. We were expecting the pullback, like, before gold even started to pull back. I know welcome. If you're still here in the chat, let us know. But he was like, I'm looking for longs on gold here. 150 pip stop
because it
loss.
logically makes sense, right?
Yeah.
You're digging low. You just broke past the new low. Now, value-wise, if I'm thinking, that's a good buy. 4,000 gold is a good buy. If people are trying to buy it at 4,100, why isn't 4K a better buy?
New home sales dropped 7%. That's nobody's selling because nobody's buying.
Yeah. New home sales. We also got this one coming out of the minimum expectations as well in units. And then 7%, 7.3 month-over-month change.
Wow.
So dollar is still holding it's merely sorry, let me just go to dollar real quick.
I'm also working on thinking expect 2 to 3x longer to play out for your trade. Dopamine detox thing for me. There we go.
Exactly, man. That's the mentality you should have. That's always what I go into, is that, hey, whatever timeline I have for this trade, the market has a 3x higher,
right?
You know, so even with like dollar pushing just slightly off of these highs, it's just slightly off of these highs. Am I expecting dollar to go bearish? I'm not. But do I know corrections like this are possible? Absolutely. Where can we correct to? Even 100.5, 100.6. But that still means like dollar's still bullish, right? Dollar's still bullish. All I give a shit, dollar could come down to here and push up. Does that mean dollar's bearish now? No. It's just a corrective phase. How many times have we seen dollar correct? Yes, we're above this area that we've been in since 2025, and we're tapping into this liquidity zone to the left over here. But fundamentally, dollar's bullish. So whatever the market wants to do, the market can do. I know that positioning will align with the macro buys at the end of the day.
Yeah, looks good. Equities, man, so range bound right here, bottom of their range. I'd be interested in shorts, but really not a fan of selling low, right? The whole saying, buy low, sell high. You do not want to be fighting a trend.
Yeah, and like the range for the buys towards the upside is much higher, right?
Yep, exactly.
Even if we see sells, I would love to align myself on buys at one of these lower demand areas would be nice, right?
Yep.
Where we previously had buying happen. So this 5% low again that we are talking about, if we come back to it, that would be a good instance of buying. Or if we were to break above this area where we're creating orders and support right now, and we get some sort of retracement here, that would be a great buying opportunity. I would just wait personally on equities just because of how range bound we've been for the past day. And it looks like markets are just awaiting PCE data. Same with NQ. I'm not a big fan of this at the moment. This area is just holding, right? Like this area that we have on NQ towards our left over here has just been holding. So as long as we just maintain here, your next area of interest would be into these deeper demand zones, right? Again, same thing as ES, is that I'm not really looking to short here. I'm not looking to short here. I like to, on US equities, especially when like around this area, I don't want to look for shorts unless we're at all-time highs. Like if we fail to break this and we have more hawkish data and hot US data, then I'll short here. I'm not looking to short if we're down here and we have such a massive range towards the upside. And I know equity buyers are such greedy greedy, right?
They
Kevin,
are.
my bad, man. I gotta jump out. I'm getting called
Oh,
into a meeting right now.
you're killing me, Smalls. We got you leaving early on me, Imre leaving early on me. It's because we didn't hit 50 likes yet, guys. You guys got to run that like button up. Noab, thank you for joining us today. That was awesome.
Thank you, man. Talk to you soon.
Absolutely. Talk to you soon. Later, bro. All right, ladies and gentlemen, we're going to keep the stream running. We got about 24 minutes left. We're going to keep things going. I took a couple scalps myself on the S&P and NASDAQ. The first one was a ES long position I had taken off of these lower wicks right here. Saw some absorption, just took it to some highs real quick, got in around 41 out at 60. NASDAQ, I took a little short scalp on that. At this point, we're staying patient. That's right, guys. I'm learning to be a patient trader. I used to have a finger trigger hand. Thanks for you guys for sharing your knowledge. Yo, it's our pleasure, right? And it's so easy, right? We could be sitting in front of a chart. All you have to do is just click your mouse and you're in a trade. You're out of a trade. You're in a trade. You're heavier in a trade. There's not much that is physically stopping you from being impatient and taking all these trades that you shouldn't be taking. So when that's the case, you need to figure out, okay, well then what psychologically can I do? If there's no physicality around me, nothing physical stopping me from entering, what mentally can keep me patient? Is it joining one of our market in the morning streams? Is it going over a different chart and setting an alert so I'm not staring at the chart that I'm waiting for? Like gold, we were waiting for shorts at 40.60. We were waiting for that when gold was all the way down here at 39.90. We said, all right, we're still waiting. We're not selling these lows. And aren't we glad we didn't sell the lows? Staying patient. We didn't hit 40.60 yet. We didn't hit 40.46 on XAU USD either. Staying out of gold. Equities, ES and NASDAQ, they were looking a bit weaker as we see buyers kept failing to bring us higher. So I was looking for us to break, but Noab's spot on, man. The zone we're in on NASDAQ right now. This has been our support all of yesterday. Yesterday, we kept failing to break below it. But something that I like to keep an eye on is the longer we take to move away from a zone. So here's our first reaction, was about 400 points. Here's our second reaction, only about 200 points. Look at how much weaker the reactions are to this zone. That tells me that this area is becoming a lot weaker. The buyers that were supporting price, their volume, they're getting empty, right? They're running out of fuel. This zone's not as strong anymore. So I was looking to see if we can get that break below and a push lower on the NASDAQ and S&P, driven by some stronger equities to the downside. Now let's take a look at our equities. Microsoft went from, it opened 371, pumped to 378. Now it's right back to 373 again. SpaceX opened around 153, dropped to 150, back to 156. I think SpaceX is going to stay choppy for a little while. I do think it could even have one more run higher. So again, those people that were buying high have a little hope, because again, markets are all about fear, greed, and pain and gain, right? So I would think that SpaceX could possibly try to move higher one more time, whether it moves to 180 or the 200 key psych level one more time. Get some more people buying. People are buying it up again, thinking, oh, I knew it. Let me buy the dip. I bought here. Let me add here. And then like we went over last time, the billions of dollars, 1.92 billion. So by the time we get back up here again, it's going to be over $2 billion worth of volume into SpaceX. Imagine that 2 billion being completely swept out. That's what we're going to look to happen. We just made a low. If we look at our recent low from our IPO, we made that lower low. So now again, pull back, create a lower high, SpaceX dumps, pulls the market down with it. Now, I'm not saying SpaceX is the main driver of the market. Do not think that's what I'm saying. But overall, markets like to trend and trade together. So if we get SpaceX pulling back and reversing back to the downside, I'd want to see also NVIDIA, which it's already doing, start to dump. NVIDIA just broke below 200 right now. That's a great short, right? That's a great opportunity to say we're getting weak on our equities. Apple also moving lower. Microsoft, look at Microsoft, ladies and gentlemen. Look at this area of support we had since 2023. Right now, from all-time highs, Microsoft is down 30%. Long-term investment-wise, great buy the dip opportunity. I'd like to see some more downside on Microsoft, but just like we mentioned with SpaceX, one stock doesn't move the entire market. Microsoft might be one of the few that doesn't sell off with the market, and it might stay range-bound within this little range right here. And that's absolutely fine. But keep an eye on that area. That's Microsoft. We went over Apple. Nvidia's dropping. Somebody asked, what's a good price to buy in on SpaceX? Yeah, you know what? Famous is laughing, but I'm with Famous on this one. I want to see $100. I want to see those people that bought the IPO, even when they bought the pre-IPO on like Robinhood for $135 a share. So 135 is another key level that we should be watching on SpaceX. 135. And guess what? Add an alert. Oh, nope, that's a garbage. Let's add an alert to that. Now we know SpaceX crossing 135. Create. Perfect. Now we will be alerted when this happens. But again, 135, we're below that. All those pre-IPO buyers, they're trapped. They're in a bad position. They're underwater. They're in a losing position. They have to liquidate if it goes too low. So yeah, SpaceX, $100 would be great. I'd love to see it below 100. Really blow people's minds, make people second guess how they invest, and then boom, right back up in their face after they get out of their trade. Gold, so close to that 40.60 and that 40.45 on XAU USD. But guys, let me know, what are you guys trading? Did you take any trades yet today? Oil is below $70 a barrel, guys. $70 a barrel. This is massive. We haven't seen these lows since the beginning of March. That is over 107 days ago. Months and months ago, guys, we were at these levels. So is oil finally starting to settle due to the Iran war and the conflict starting to settle itself? Yes, absolutely. We're seeing that in real time. I'm with Imre, though. I don't think that oil's just going to continue lower and then get between that 65 and 50 range that we're used to. But guess what? We could be wrong. There's no say in the market that says you definitively know something, right? Unless you're looking at actual data and actual information like market provides, like how did retail sales come out? How did core PCE come out? There is no definitive, there is no definite. So when we come up with our trade plans, we come up with our analysis, that's why it's so important that we're not just taking trades, but we're managing them and managing our risk and our accounts. We're not just traders. I want you guys to get the idea out of your head that you're just a trader. You're not just a trader, you're a risk manager. Your job is to not take winning trades. Your job is to make sure that your losing trades are much smaller than your winning trades. Your goal when you're finding that consistency should not be, oh, how much money can I make on this next trade? I have to go in heavier on this next trade. I got to make some money. I want to get paid out. Everybody wants that. Your goal should be, how am I managing my trades properly? How am I holding on to an account without blowing it in a week, in 2 weeks? Once you're able to assess that and you're able to manage your risk properly, that's when you're going to see follow through. Yes, sir. Took GBP USD shorts on London high, riding her 139.55 area. Could you perhaps open Market AI on it? I don't know, Sean. I could, or you could get the dashboard yourself with discount code Kevin. Look at any asset you want. I'm just kidding. I got you, bro. That's what we're here for. GBP USD. Yeah, you know me. You guys down with OPP? Yeah, you know me. GBP USD flat at 132 as traders brace for US PCE GDP, right? So this comes out tomorrow. We have economic data. So like we're seeing in our US equity markets. Yeah, exactly. You guys got it. So look, equity markets are range bound yesterday and today. Well, guess what? They're not range bound for no reason. They're range bound because they're anticipating something. Markets move on anticipation. They move on optimism, uncertainty, and surprise. Right now, we're waiting. We don't have much uncertainty. We definitely don't have any optimism because of the Fed's stance. So it's waiting. We're waiting to see, does tomorrow come out as a surprise? Take a look at our economic calendar. GBP. Yeah, remember I said GDP USD. That's funny. You guys aren't going to let that down. That's fine, man. I'm a futures trader. You guys could clown me. I'm all for laughing and enjoying. It's important that we learn. It's important that we come back every day because consistency is key, that we create routine. but it's also important that we have fun doing so. If you feel like you're dragging your feet, you don't feel like doing it, you're coming just because, you're not going to really learn and grasp anything. You have to enjoy what you're doing. Guys, make sure you're running that like button up. For whatever reason, we're not at 50 yet. We're just 7 away. So get us up to 50, maybe even 60 on YouTube. I appreciate you all for joining. It is 10:16 now. Let's go over some of the economic calendar that we have tomorrow. Tomorrow we should have Jeev on. At the moment, that is still cleared, so he hasn't said that he's busy or anything yet, so that is a good thing. So drop a like if you're excited for Jeev to join us tomorrow. Tomorrow we have durable goods, which is not going to be the primary focus. PCE, that's a much stronger report. GDP final, that's tomorrow at 8:30 as well. Initial jobless claims, as you guys know, is every Thursday, so not the biggest of impacts. And what else? Nothing else really major. Nat gas at 10:30, but again, nothing major there. Take a look at our equities. We see that NASDAQ is still trying to sink below that zone. Again, my opinion, I do want to see NASDAQ continue to move lower. I want to see ES continue to move lower. 30-minute gave us a nice basing and a push lower here. So I might even look for the 30-minute to close. And guess what? If the 30-minute gives us this rejection candle, so look at our basing, longer upper wick shows me buyers were trapped in this market. The reaction that we're getting shows me sellers took control in this market. So I would look for continuation from there. Yes, sir. Let's see. Took the gold sell based on yesterday's live stream, was patient and paid off. Hey, good job, Rochester. Good work, guys. Don't forget, shoot us a like, drop a follow us on social media. Instagram for Market AI is marketai.insights. Follow my personal Instagram too, is at Trading with Kev. I like to post daily or every other day content for you guys, going over what's moving in markets and some information just like we do here, but very quickly broken down, 25-30 seconds. Can we have the discount code for market? Yeah, so the discount code that I'm aware of at the moment would be KEV, K-E-V, right? So Kev. That'll save you 10%. So definitely want to look into using that. How much has SpaceX puked? Good question. So we were just covering SpaceX before, and SpaceX has dropped from its all-time highs, because that's where we measure from as traders and investors, has dropped over 30% from those all-time highs. Isn't that beautiful for anybody that's not in it from those all-time highs? I'd ideally want to see us continue lower. Let's get a massive drop. Let's see that 70%, that 50%. Let's hit that $100 mark. That would be a 55% drop on SpaceX right there. Again, talk about pain in the market, talk about gain in the market. There can't be gains in the market without pain. I want to see that pain on SpaceX. Billions of dollars getting liquidated just for us to have a much cleaner entry and opportunity. Let's take a look at our headlines, see if anything new has come out, right? One of the best parts of market is the breaking news headlines, the alert tab that it has, so we don't have to keep it on our screen. We can keep it sort of in the back, and it will alert us if anything happens. But let's see if anything's come out. U.S. Postal Service tells Congress it will not deliver ballots for states that do not disclose voting roll lists under proposal. Oh, man, U.S. Postal Service, they're letting them hang. U.S. new home sales drop to 580,000 units, missing estimate of 640,000, declining from previous month 622,000, signaling slowdown in housing demand. Guys, what I say as soon as it came out, I said it came down 7%, and I said sells are lower because nobody's buying. Nobody's selling because nobody's buying. Word for word is what I said. What's this headline say? Signaling slowdown in housing demand. Demand is the buyers, supply is the sellers. Nobody's buying right now because the economy's in a bad position. No matter how you slice it, you ask an everyday American right now how they feel the economy is, right? That's where consumer confidence comes from. They're not going to be too happy about it. And what's cool, we could come to our economy tab. We could actually find consumer confidence here. So look at this. Michigan consumer confidence was sitting at a 44. Anything below 50 means there is some uncertainty and worry about the economy. Anything above 50 is confidence and strength. So let's see. So we've been below, we were above 50 back in March. War began. We're at 44.8. Very cool. Very cool. Let's see. Oil still trading near 70. S&P and NASDAQ trying to move lower. We got about 9 minutes left for the 15 and 30 minutes to close, so we're not jumping in right now. Remember, our analysis before was waiting for the 30-minute time frame for this current 30-minute candle to close somewhere down here. We have 8 minutes left. That's plenty of time for price to move higher, price to move lower. So if our analysis is here on the 30-minute, we have to wait for that 30-minute to close, period. Like, look at that. Look at those buyers, man. Look at this demand area I had marked out. This is where I took those longs from earlier when the lab was going over gold. Took a nice scalp on longs, and boom, that area held up amazing yet again. A lot of times markets will like to repeat themselves off of those recent areas, especially in range-bound markets. We see that we're range-bound, then how's the saying go? Buy the low, sell the high. If we're in the middle, we leave it alone. Take a look at where the NASDAQ is currently trading. Now, NASDAQ has a bit more weakness today. Why do I say that? Because NASDAQ just made a new low of day, while ES did not even break its futures market low. So it's after hours low, I should say. So NASDAQ's got a lot more weakness, ES a bit more strength. Overall, these are market conditions we do not want to trade. Look at the candles right here, ladies and gentlemen. 5-minute time frame. Green, red, red, wick, green, red, green, red, green. It's barcoding like we've been seeing in the past. We want to leave this alone. Understanding when to not trade is just as important as understanding when to trade. Remember that. Let's see. Nice buyers stepping in on ES. Again, one of the main reasons that if our analysis is on the 30, we're not jumping in when there's 7 minutes left in the 30-minute. We're shooting ourselves in the foot at that point just because we're a little impatient. We should know. Now, we shouldn't know exactly how long we should be patient for, but we should have an understanding of where's the area that I'm looking for us to be patient for. If I know we're range bound, then I should know where my low and my high are. If I know that we're chopping our way to a direction and I want to go short in a supply area, well, then I know that, okay, NASDAQ, we were looking for 29,900. Okay, well, if we're at 29,800, 29,850, I'm not taking any trades. I'm waiting for the reaction off of our predetermined zones. We went over that with IMRE. We went over that with NOLAB. We go over it every day. You should have your pre-market analysis just like we do here in the mornings, guys. We come on early. We don't come on early just because we feel like it. We get on early. So one, if there's any economic data, we're here to cover it for you guys. But two, so that we have that step before the market. We're positioning ourselves in a position that says, okay, if I find zone A, let's take a look at ES for a moment. I have zone 2 is this pivot high. So this is what I'm looking for a sweep for shorts. Then I have zone 1 down here for support. Okay, great. Everything in between, just noise. We're trading the range. We're waiting for that. And guess what? We found that range before markets even opened. That's the whole point of doing your pre-market. Because guess what? Markets could have opened and then I could have looked for a range. But when markets are open is usually when people are trying to find those trades. And if you're trying to find a trade while you're doing your analysis, you're not going to have a clear headspace and you're going to end up forcing trades before your analysis is done. You're going to think you missed the move because markets are moving. None of it is worth it. Give yourself 5 minutes, 10 minutes before you trade to come up with your pre-market plan. Do your higher time frame analysis and then execute accordingly. I'm a huge believer that if you want to be consistent in trading, you have to have routine. To have routine, you have to have consistency, and routine builds consistency. Gold still trying to make its way higher here, 40.62, 40.45 is what I'm looking for on GC and XAU USD. Oil is slowly pulling back. I wouldn't look for any trades on oil with the momentum it's had to the downside. And ES, same deal, right? We were waiting for the 30-minute. We still got 4 minutes. We're still waiting for the 30-minute time frame. There is no forcing trades ever, ladies and gentlemen. That is not how we trade. That is how you lose money. Let's see. Silver. Bro, I can't believe Excuse me, I can't believe silver's below $60. Now, we called out gold shorts the other day, but we also called out some silver shorts off of that 66.40 area, and that has also just continued to play out from that area to the lows. That is, let's see, how many ticks? 1,628 pips or ticks, whatever you call it. Huge move right there on silver. So we're always staying on top of things. We're coming up with our analysis pre-market. You guys see it here from beginning to end. That's how we do things. You have to have structure. Structure makes consistency. You cannot have consistency without structure and routine. That'd be like thinking you could just wake up, roll over to the charts, take a trade, and go back to sleep. Like, as much as that would be nice, and how technically that could be possible because all it takes is a mouse click to enter and exit a trade, it's not probable. It's not repeatable. Repeatability is the key to consistency, and structure helps you build that repeatability. So oil still pulling back. ES and NASDAQ still very choppy here. I mean, complete no trade zone. This is why I was just sort of scalping the range here. This is not a range where we would look to enter and hold. This is what is called building a system, and it took me a long time to understand. Yo, you're right. Welcome. It's about building a system. Think of it this way too, right? A lot of people get into trading because they're trying to get out of work. They don't no longer want to work or answer to somebody, a whole 9-to-5 thing. Well, guess what? That work, that job you had, it worked because there's a system in place. When you're a trader, you can't just jump on the chart and hope for the best. You have to have a system in place. If you don't have that system, you're going to struggle, right? You're going to be inconsistent. You're going to strategy hop, and strategy hopping is one of the worst things you can do for yourself. Imagine coming into the market one day thinking, oh, I'm going to trade the 15-minute opening range breakout. And then the next day, you're like, okay, now I'm going to trade the 30-minute opening range breakout. You're going to get inconsistent results. You're going to get inconsistent trades, and oh my goodness, I was going to say acquisition, but oh my goodness, when you take the trade, wow, drawing a blank on the word there, but you guys get what I'm saying. So create that system. Appreciate you, Sean. It's all about speaking facts, all about creating that system, that structure, consistency, but really great patience. Gold was a great example today on being patient. Now, I know Welcome absolutely killed it. Welcome, if there's another name you want me to call you, please let me know, but I just go off of if you're here on YouTube or Twitter and you comment something, I'll usually call you whatever the first name I see is on your username. But for myself, gold was a great patient opportunity today to prove that I could be patient. Piyush, did I pronounce that right? Awesome, bro. Cool. Join the Discord community. Definitely want you guys to all join our Discord over here. It is a free Discord to join. I will invite you guys one more time. I'll copy that invite and I'll send that over to you guys. But join it. Drop some screenshots. We have a share your wins tab as well. We had Mr. Zen Master 1 in the morning today. Amazing sell call outs on yesterday's market webinar by the legends Nalab and Kevin. And look at this, guys. This was identical. That was the zone. Look at that. This is this exact trade setup. This guy took this exact trade setup, marked out the exact zone that I had marked out, and let that run and did phenomenal. That is amazing. Amazing, guys. All about teamwork, patience, and knowledge. Knowledge is power. Yo, 2 more likes to 50. You guys are slacking. It's 10:30. We should have rolled over 50 by now, guys. Look at this, man. Another great example of patience on your time frames. We were looking at ES to close bearish on this 30-minute candle. Guess what? The last 8 minutes, it went from bearish to bullish. That's why we don't chase. That's why we don't force trades. Great job. Really great. You guys got to give yourselves a pat on the back too when you don't take trades. As funny as it sounds, if you follow your rules, you follow your system, you follow your pre-market plan, and no trade criteria matched or hit your pre-market plan and you didn't take any trades, you didn't chase, you didn't force, then guess what? Sitting cash That's a successful trading day. Wouldn't you rather be break even on the day than have taken a loss that day when you knew you shouldn't have been taking a trade? Yes, that's all about discipline and mindset. So guys, great job there. Great being patient today, not forcing trades, understanding where support is, understanding where resistance is, and understanding the fundamental background behind all of these markets that we cover here every single day. So guys, run the like button up, man. We're a few likes away from 50. I appreciate you all for joining. This has been a phenomenal stream. Today we had two special guests. We had Imre in the morning. So if you didn't catch Imre's segment, I 1000% recommend you guys rewind and start the stream over. And then we had Nalab join us as well to show us his amazing gold trades and great gold analysis too. So really great work, everybody. Yeah, W team. It's all about teamwork here. And guys, if you join here every day, you're part of the team too. We're building a community. We're building a strong team. And that's what I like to see. I love seeing your guys' comments. Please engage. Let me know what you're trading, what you're looking for, and everything else in between. I'm so happy to be here to do these streams for you guys. Absolutely. It's my pleasure. Gold about to hit. Stay active on Discord, guys. Yo, we'll keep an eye on it. Let's see. Yeah, gold within that range still hasn't hit that area that I was waiting for. Now, because I have an alert here, guys, just like Nalab mentioned, I could go about my day, go do something else, and let's say this price level hits in 30 minutes. Okay, I'm going to get an alert on my phone. I'm going to be able to come back and take that trade, or I could even take it on my phone if I have the trade set up, which is your entry and stop loss mapped out beforehand. So really good trade, really good setups, really good patience today. Give yourselves a round of applause. You guys all did phenomenal. We are close to that 50 likes, which is great. Again, a team effort right there. You guys were great. We'll see you guys all tomorrow. Tomorrow we have Jeev joining us. It'll be another phenomenal breakdown, great trade setups, and a lot of economic data coming out as well. So guys, I look forward to seeing you all tomorrow. Have a great trading day, and I'll see you later. Peace.